Greetings, tax tip lovers, and welcome to this week's Top Property Tax Tactics in just 5 minutes. Come, gather round, people, and let me share with you the story of Antonio. He's an economist, and right now he's busy, busy, busy. Apparently, economists have predicted 8 of the last 3 recessions. Now, regular tax tip lovers will know that at Rethink.Tax, we like to give away ideas for free, and I've applied a 100% discount to this one. Antonio's a relax, play the sax, pay the tax kind of guy who paid his accountant handsomely every year to maximize all the allowances he was legally entitled to. And that's what he thought he got for his near £7,000 a year in fees. Truth to tell, it turns out he and his accountant went to college together. And in Antonio's own words, he spent many a drunken student social event trying to get into her pants. Well, hold back the night, turn on the light, faint heart never won fair outcome. And 17 years later, he's only now getting his head around the fact that it ain't gonna happen. Turns out he's married the wrong sister, but still hasn't entirely ruled out a politically incorrect ending to the story. Hey ho, back to Antonio. Seems he'd gotten bored during lockdown and stumbled on one of my videos in which I'd referred to the possible merits of Xero and QuickBooks as a cost-effective and oftentimes adequate alternative to contributing to the overheads of the grand premises which often house hordes of well-paid accountants and their support staff. He called, we zoomed. The team took a look at Antonio's latest self-assessment tax returns and discovered there was no claim for higher rate tax relief on his pension contributions. Not this year, not last year, not the year before. And in Antonio's case, that's £24,000 of unclaimed tax relief and a trip to the naughty step for his sister-in-law. Well, we thought we'd do some research of our own and see how big the problem was. And with some help from figures produced by Pension Bee, it turns out to be huge. It seems that every year, hundreds of millions of pounds of higher rate pension tax relief goes unclaimed because higher rate and additional rate taxpayers are failing to claim what's due to them through their self-assessment tax returns. Now, worse, another 1 million taxpayers will likely be drawn into these bands over the next 5 years as the Chancellor has frozen income tax thresholds until 2026. Currently, higher rate and additional rate taxpayers are entitled to tax relief of 40% and 45% on their pension contributions. For the hard of thinking, that means HMRC gives higher rate taxpayers £40 for every £60 they contribute to their pension, up to a maximum annual allowance of £40,000. Apparently, 1/5 of higher rate taxpayers and 2/5 of additional rate taxpayers claimed the relief they were due through their self-assessment, which might suggest that Antonio's accountant is not alone in this oversight. Just to remind you, the total tax relief not claimed for Antonio was £24,000. Now, this is only an issue for those receiving tax relief at source, RAS, who receive 20% at source and have to claim any extra due via their tax return or by contacting HMRC directly. Anyone in a net pay scheme receives tax relief at their highest marginal rate through their salary. For Antonio, enough was exactly that, and he's reviewing all of his professional relationships, and here's our application for the job. We work with growing and ambitious businesses, providing you with tax strategy and planning advice to accelerate growth, maximize potential, and retain your legacy for your family. We're hands-on for those who want that, and at the end of the phone for those who don't. Your options are you can do nothing and stay in the exact same place and pay a shed load of tax unnecessarily, or you can follow the link above for a free power hour review with property tax experts who are ex-PwC and ex-HMRC, and we'll make your property tax planning like it was our own. Okay, that's it. Stay bright. Catch you again for breakfast next week. Ta-ra!